An unintended consequence of coronavirus lockdowns across the globe has been a reshaping of customer behaviour and the way that banking is conducted.
In particular, both businesses and individuals have suffered massive crunches, having to manage expenses while at the same time being starved of income.
Well, here to explore the impact of Covid-19 on the Indian banking industry, we're joined from Mumbai by Mr. Rajiv Anand, who is Executive Director of Axis Bank. A very good day to you. Now, the sector, the Indian banking industry, in fact, has seen major overhauls over the last few years, mainly because of strong decisions like digitising payments, adapting mobile banking, and even managing government-led campaigns. So, given all those factors, do you think that the sector was actually ready to take on a big challenge like this pandemic?
The whole process of digitization really started, when we saw in 2016 the demonetization of currencies. The old currency was taken out, and that, in a sense, triggered a massive move towards digital payments. And then we saw the evolution of UPI, which is instant payment, both P2P and P2M, which has grown leaps and bounds over the last 3 to 4 years. And I think the whole process through COVID-19, which was really about contactless banking. I mean, people are wary of meeting bank officials, are wary of touching currency, and therefore, in that sort of an environment, it became an absolute essential that we were able to put transactions through on a contactless basis, and that's where digital came in. And if you see what we've been able to achieve on a year-on-year basis, UPI payments, I mean, it's the classic digital payment that we are running here in India. That's up 80% on a year-on-year basis, and we will continue to see that sort of growth. The lower value payments, NEFT, which we typically put through on mobile phones, are up 10x in the same period. And so therefore, I think the infrastructure, the point that you're making, the infrastructure for digital and digital payments and digital banking was already in place, before COVID. And I think COVID has only ensured that adoption becomes even faster, deeper, wider through the period of the last 6 months or so.
Rajiv, between 2019 and 2020, the service sector contributed more than 55% of Indian GDP, where the financial segment was, of course, a major contributor. Given its strong impact on India and that there are multiple problem statements at many levels, how well have banks adopted digitised mechanisms to create operational and customer solutions?
I think the point that you make is valid. The banking system continues to grapple with a huge load of non-performing loans. We broadly believe that we were at the top of the cycle pre-COVID, but I think COVID is going to bring its own set of bad loans into the banking system, and we'll have to grapple with that on one side and a relatively weak economy on the other side. But I think the question of whether banks are spending enough time and energy on digital, I think it's a question of survival. I think if you don't have a digital strategy which is both collaborative, meaning that it's also working with the likes of Google and Amazon and WhatsApp, you may not be in existence 5 years from today or 10 years from today. And so therefore, I think it's fair to say that the banking system, while it continues to grapple with various issues on non-performing loans, it continues to invest very heavily on upgrading its technology, its digital capabilities, the use of artificial intelligence, ML, contextual feedback loops, so that things get better and better. And I think, and banks have also realized that, through the use of technology, we're able to get that fine balance between the customer experience on one side and being able to manage operational risk. And because of the fact that you're eliminating paper, the fact that you are able to carve out huge amounts of cost is only a benefit. And I think, to me, the fact that you're able to put more and more transactions through digital, I think today a survey now says 95% of transactions now go through digitally, which means that only 5% of transactions go through bank branches. That clearly has a positive impact in terms of cost and cost-income ratios, and also provides a very differentiated customer experience to customers. And we are able to manage operational risk through the use of data analytics as well. So I think the benefits are multifold, and I think in an environment where banks are constrained for capital, are grappling with bad loans, the investment in digital continues to be strong.
Now, we know that globally central banks, they have been gearing up with various measures and strategies to counter the building of stress in the system. So what is your take on the role of RBI to lead the path for banks, and indeed your expectations from that?
Like I said, the Indian economy was, sort of a relatively weaker, coming into COVID. And so therefore, the amount of space that we had on the fisc was constrained. So the route that India has taken is through monetary rather than fiscal policy. And I think in that context, I think the Reserve Bank of India has done a wonderful job being able to manage the stability of the banking system, being able to provide some sort of stimulus to the economy through this period. One, interest rates have been cut by 115 basis points. There is now ample liquidity in the system. Banks have been allowed to restructure loans. Basically, I mean, we can clearly see, particularly in the hospitality segment, in malls, in cinemas, those are some of the segments which are going to take time to come back. And I think it becomes important for banks to be able to restructure these loans to give them a chance to be able to survive in the long term. The government has also launched a guarantee scheme so that banks who are hitherto averse to lending to micro and small scale enterprises, a certain percentage of the first loss guarantee was taken by the government, and that has been a fairly large success as well. So there have been multiple steps, cutting rates, making money cheaper, ensuring that there is ample liquidity in the system, coming up with various measures to ensure that there is transmission of the lower rates from the banking system, from the central government to the banking system, and to from the banking system into the wider economy, both within the retail and wholesale parts of the banking system. So I think all in all, there have been multiple measures over the last 6 months. Are we out of the woods? Probably not. But I think if you look at it relative to where we were in April to where we are today, I think there's been a significant recovery in the economy. There is some way to go, and we're quite hopeful that the second half of the year will see much better growth as we go forward.
Now, Rajiv, being a prime stakeholder in the Indian economy's barometer sector, you've talked about how banking has performed under the pandemic stress. Some of these measures and transformations may be for the longer term, of course. So in the post-pandemic era, which we hope is very soon, how different is banking going to be at the corporates and even at the retail level?
I think customers are going to be averse to meeting people. Perhaps one-on-one will come back very soon, but large meetings will probably take time. And I think in that sense, the focus really has to be on contactless banking. And we recently launched account opening through the use of video KYC. So the whole process takes about 5 to 10 minutes. There is no physical contact at all. The customer fills a form on his mobile phone or on the internet, and then he's connected to our call center at the back end. We are using existing infrastructure, which is Aadhaar, which is our the equivalent of Social Security number here in India, which every Indian citizen now has. We're using Aadhaar to be able to authenticate the customer. And then in a matter of minutes, the account is opened. Through the entire process, the customer only sees people on a video screen, but the account is opened in a matter of minutes and he can start to transact. I think that is really the future, and we are seeing similar similar initiatives on the corporate side as well. For example, our own corporate bank has seen strong growth in the first quarter. The numbers for the second quarter are not out, but the numbers are sort of reasonably healthy. And really, we've all done this through the use of technology, with both us and all my teams working from home, and all our clients working from home as well. And I think it's been amazing that not just in terms of when we're talking about working from home, it's not just about the access to email and some of the office applications, but my foreign exchange dealers were also working from home and making prices both for customers as well as for themselves sitting at home. And I think that's amazing. So we've been able to adapt. And I think, and the one last point I want to make is that not just banks, but I've been amazed by the resilience and adaptability of corporate India. And I think that will certainly hold this economy in very, very good stead in the years to come.
Okay, well, Rajiv Anand, it's been a pleasure talking to you. Thank you so much for joining us here on day 2 of Sibos. That was Rajiv Anand, Executive Director of Axis Bank.